The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 2nd magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't call in, no problem. Let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on magnificent, marvelous, magical. We can come up with a bunch of M's out there, but we'll start with those three. Monday, of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 130 points, 24,140 is the print. S&P down 13, 2705. NASDAQ 100 off 0.3% or 22 points. Russell down 2 points, trading out at 1640. Transports are up 60 points. That's nearly 0.6% to the upside. Spot Bucks Index up $1, trading out at 1710. Gold back 12 buckaroonies. Silver down 30 cents. Light sweet crude off 51 pennies out there. So we do have things to look at. Of course, I want to look at what you want to look at. And the first question that came in was from Powell. And Powell wrote in, I don't have it on my phone right now, but he was asking if there was, if there were any patterns associated with a potential bottom inside of Bitcoin. Now, for me, what I can do is I can take a look at the Bitcoin futures contract. I know I can get that out of my mouth out here because unfortunately I get the end of day data for Bitcoin itself, but we can take a look at the equity futures contracts out here, and we can take a look at either the CME version or we can take a look at the CBOE version. Now, what's up on my screen right now is the futures contract, and what I can do is just step it up one bit higher, one level higher, really in order to be able to show Powell or you and everyone the patterns that are associated with bottoms out here. Now I'm going to show the continuous contract out here. And that way I've got more data than just taking a look at the currently active futures contract. And what we can see out here, this uses a couple of the different patterns that you and I look for. As an example, Powell, if we take a look at the trading session, this is on Bitcoin. So you can see this goes back to, this is the CME version when it, came out on the trading session of December 19th and, has, never looked back as far as trading to the downside out here. And getting back to 20,000 is probably, well, first, it has many hurdles to overcome before that level will ever be seen again, if it will be seen again in any type of time frame such as the near future. If we take a look, but there's patterns. You and I were agnostic to what instrument it is that's actually on my screen right now, because we just use a set of patterns. They repeat over and over and over and over and over again. And if we take a look at just one of them, well, there's two of them. Let's take a look at the Tom DeMark setup system out here, and you'll see it's a series of 9 counts. Just so happens that back on April 27, you got a second 9-count version out there. You watch those 9 counts. The reason why you do, and with regard to 9, is take a look at 9 successive sessions where in this case here, the close is below the close of the session 4 sessions earlier. Yay, if you can't figure out what I just said, you don't have to worry about it. You don't have to learn a system. You just have to tune in right here because it shows up on my screen. Now, when you see those 9 counts, they can be an indication of a change in trend out here. Just so happens that price was moving lower, doing less relative energy. This is Bitcoin going back to April 7th out there. And then on the trading session out here, Powell of April 11th, price closed above Stevie's red line. You always want, if you're trying to go long, you always want to see, especially if you're coming off of a bottom, you want to see price close over Stevie's red line. Why? Because it means that you at least now have a rising price oscillator. If your price oscillator continues to fall and price runs into Stevie's red line, trades back below it, you do not have any kind of confirmation of any beginning of any kind of trend to the upside out here. So now fast forward to where we're at today, because that in essence was really Powell's question out here. We don't have a time to mark 9 count, but what we can see here is we had price moving lower, doing less relative energy back on June the 30th. So I guess I've got, so I've got Sunday's data out here. And what we can see here is you now have a gap to the upside. That says July 3rd. That's really weird. So something, what is wrong on what is wrong here? Let me see. None of that, the dates didn't make any sense out here. What's going on with my properties inside this chart? No, that's pretty weird. Well, this is today's action. Regardless of what it says on the bottom of my screen, this is a daily chart. Here's what we can see. So price is above Stevie's red line. This says, yeah, there's some merit. This is how bottoms are formed out here. We saw the last decent bottom inside of Bitcoin. And you can see that had a decent move. Looks like it, was probably a 50 to 61% retracement of the move. So you could anticipate something like that. If Bitcoin's going to continue to move higher, my actual price target would be this little green dash line. The green dash line, I'll give you a price on that. This is the futures contract. Again, we're taking a look at the continuous contract here. But nonetheless, you would look at the high from the trading day. Well, it looks like May 11th. Maybe it's really May 10th. The price point out here is 94.15. You're trading at 66.10 as we speak right now. We use the same pattern regardless of the instrument, regardless of the time frame. So, Powell, I hope that assists you in your trading. I see a question inside the Tiger's Den. Let me read this. It says, please assess the charts of the Nikkei, the Shanghai, and the Kospi. So I don't have the Kospi handy. Maybe there's a ETF for it, which would be pretty easy to find. So if you know what that ETF might be, I could take a look at that. But in the meantime, let's go take a look at the Shanghai and the Nikkei out here. So if we take a look at those two instruments, and we'll want to take a look at them on multiple time frames, as soon as I can find them on my screen. Here's the Shanghai. Closed down 75 points last night, about 2.5%. And so let's put this up on our screen out here. I see I've got some red and green lines. Usually that means I've got a longer term time frame out here to take a look at. So when we come back from this break, we'll go assess this real wide set of diagonal lines, both at support and at resistance inside of the Shanghai Index. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no-questions-asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So what we're doing right now is we're taking a look at, we're trying to assess what's going on inside the Shanghai, what's going on inside the Nikkei overseas. And I just switched pages here because in this, by the way, this is the Shanghai indice. This is a monthly chart out here, which in essence I was going back to a monthly chart anyways, just as we were going into break. But this set of tools, this set of charts out here, muy bueno. Well, provides us with a ton of information. And that ton of information, if you take a look at the left-hand panel, that's the Shanghai priced in dollars. Next to it is a Shanghai priced in euros. Next to that is the Shanghai in yen, and then you've got next to that the Shanghai in Great British Pound. Of course, somebody out there might be saying, hey, show me the Shanghai in yuan. And I could do that, only I don't have the chart here set up for it. But I don't consider, with regard to the global flow of cash, I don't really consider the yuan as an integral part of that scenario right now with regard to where global money is flowing to. It's a debate. I know we can go back and forth. I'm not going to go back and forth. I've got these three time frame charts out here in these currencies, and I think this is the largest influencing factors with regard to where cash is flowing. And what you'll see here is that the Shanghai is trading lower in all currencies. In other words, there's no global flow of cash going into it, which really sets up that this is likely headed lower. So now if we go all the way back to my other chart that we had out, there was a green diagonal line, a red diagonal line out there, just really showing you different trends. And here, this is I've got the weekly time frame chart. Let me just go ahead and I'll pull this back even further. So you can see that the Shanghai has both a rising trend and a descending trend. And likely, price inside the Shanghai is headed back to the rising trend line. That would be the green line. Now, if we take a look at A to B equals CD patterns, I'm just going to look at the most current one that is out here. That's going to start on a weekly basis from the high of January 29th. Take a look at the low of April 16th, and just a very shallow retracement into May 21st, 2018. About a 0.382 is really 33% out there, but we're not going to split hairs. What this is giving us is a one-to-one target of 2,800. But because that was such a shallow retracement out there, and because this is such a strong move, a relatively strong move, meaning it's on the left-hand side of the C to D leg, more likely than not, this is making an expansion of that A to B equals CD down. And that'll take you, the 1 to 1.272 takes you to 2644, the 1 to 1.618, 2446. And you'll see that you've got that green diagonal rising trend line. Looks to me like that is where the Shanghai is headed to. I hope that that helps you out with regard to that assessment. Unlike the Nikkei, and if we go take a look at the Nikkei out here, let me do this. Let me try to get all the way so we can take a look at the Nikkei priced in, what the global flow of cash looks like inside the Nikkei. And you'll see here that the Nikkei priced in dollars, monthly chart we're looking at, is up above a set of swing points from 2015. Price just simply came back. Once you break above a swing point, maybe you come back and you test it. In this case here, that's in essence what the Nikkei did back in March of 2018. So this thing is just in a consolidation pattern, much like the U.S. markets up at the highs out here. If we take a look at the Nikkei priced in euros, very similar to the Dow priced in euros, in that it went on to make a new all-time high. In this case here, that new all-time high took place in November 2017. Inside the Dow, it did it back in May of 2018. What's really important and pertinent there is that that is a signal to you and I that the Dow in dollars is going to take out its all-time high at some point in time. Doesn't tell us when, just tells us that that is what is going to occur out here. If we take a look at the Nikkei, priced in yen out here, just really here you've got where price was unable to bust above a high. That's the high out here from 2015. So it's just got a consolidation. The Nikkei in pounds looks pretty darn good out here. Again, very similar to the Nikkei in dollars. Now, we can do more than that. I think we should do more than that. We should do all that we can do, be all that you can be. And if we go take a look at the Nikkei out here, what do I see a 0.382 retracement. We need to put this on a monthly time frame chart because clearly there's something else out here. What is, oh, I see, I have assessed the Nikkei in the past out here. So if we take a look at the Nikkei, and you take a look at going from its high out here. So almost kind of like taking a look at Bitcoin, right? Nikkei makes a high back in 1990 at the 39,000 level, makes a beeline to the lows at 69.94. You see how long it's taking for the Nikkei to get back up to those highs? Probably the same thing. Again, doesn't matter what chart we look at. All charts are basically the same. And all we do is we apply those patterns. So just like the Nikkei is going to take a long time to get up, and it is on its way up to the 39,260, its next level is the 0.618 retracement level of that entire move. And that is 26,934. You're trading at 21,811 inside of the Nikkei in U.S. dollars. You can see here's the swing point that it took out in 2015. And for some reason, I guess I had that A to B equals CD pattern. Let's just come back to the monthly time frame chart. We'll just go ahead and draw it up and put it in here. So on a longer term basis with regard to where is the Nikkei headed to, you can see our A point. We know our B point was in 2015. It looks like our C point took place down in June 2016. So the 1-to-1 out here, it takes you to 28,795. Now, the reality is that price here is on the left-hand side of the C to D leg, and the retracement here was only a 43% retracement. So the Nikkei is in a very strong move to the upside. This is a monthly time frame chart. This is your monthly horizon out here, and this says this is headed to the 28,795 level. I say, no way, Steve-O. I say it's more likely headed to that Gartley sell pattern in the 0.786 area, 32,584. Now, that's the monthly. That's the long term. But maybe what you want to know is what's going on a daily basis out here. The daily basis, it's taken out a previous swing point, but does that really mean a whole heck of a lot? At this stage, the only thing that I can see on a daily time frame, well, it's not the only thing. It's one of the things that I can see. Let me go over to the other chart out here. Let me see if I can pull up the Nikkei. just so we can do just a tad better at the assessment. Although, where is it? Where is it on my chart out here? I wear glasses. Maybe I need those glasses. So if we take a look at so you can see it's below the 0.382 retracement, likely headed to 21,380. And at that stage, that's your 0.68 retracement. I don't see any other pattern that is out there. I do see that when it formed its most recent high, let's take a look at it. Here is well, that's the weekly time frame. I was looking at the daily for you. Let me come back and take a look at the daily, see what it is. Well, we can see it just like it made that bottom. We started out taking a look at Bitcoin. We took a look at the patterns associated with a bottom here. If you go back to March in 2018, the same thing was going on in Nikkei, just like when it made its high out here back in May of 2018, the exact opposite pattern. You can see it did generate a Tom to Mark set up 9 count. This is on June 15th. So the Nikkei wants to do a further retracement to the downside out here. But does it look bad? No. What I would be looking at, based on the longer term analysis that we just did, I would be looking to try to find out when the Nikkei actually bottoms. Looks like it could be setting up in essence, a version of a Gartley buy pattern, but probably not till about the 21,380 level. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So one of our listeners, Nick, writes in, and Nick wants to go grouper fishing out there. And, it's not the easiest of fish to catch. So he wants to do a little bit of bottom fishing, and he's looking at the EEM, the iShares MSCI Emerging Markets ETF out here. So he's asking the question, should he go bottom fishing? Should he go hunting for grouper? Now, we can see the weekly, the monthly, the daily time frame charts out here. We can see that last week you had, looks like a little hammer candle out here. But is that good enough to actually go ahead and do some bottom fishing? From a market profile standpoint, there was a brand new market profile that formed today, Nick. And price is trading below it. Price has gone up, tested the bottom of that box at 42.81, and you're trading below it. So that's really not a good thing. That's not a good scene out here. And if we take a look at the monthly time frame, just finishing the month of June, well, what we know is that the month of June finished below the bottom of its market profile. That is the very right-hand panel of our screen out there. As we take a look at Stevie's Ninja Trader chart, we look for those bottoming signals. In order for you to go ahead and throw your rod over line, not your rod, but your hook over line, we don't see that bottoming signal. In fact, if anything, that little gap to the upside on Friday ran right into Stevie's red line, and you're clearly below that. Let's go take a look at so the daily chart is saying, not a chance. No, Nick. No, don't go fishing for grouper just yet. That means no EEM out here. Let's take a look at that weekly time frame chart. Kind of squish the data just a tad. And, did this form an A to B equals CD to the downside with that hammer of last week? It did. So let's go take a look at that. Here's your A to B equals CD pattern, the best one that Stevie can draw in here. And you can see that made between the 1-to-1 and the 1.272. And so what you like to see, this is where it gets, so if you really were an aggressive buyer on a pattern like this, ideally, especially with such a long wick, right, lower shadow wick, whichever you'd like to refer to it as, ideally you'd like to buy it between the 50% level, halfway down that wick, and the bottom, and be willing to risk that money and say, you know what, if price closes below the low of the hammer candle, if I was long, which you would have been, you were wrong. And that would be another way to assess it. I would say, hey, if you're looking to buy this and you're going bottom fishing, you don't need to step into this thing right now. The daily, the monthly isn't giving you the best of signs out here. I'm not asking you to wait till price closes over Stevie's red line on a weekly basis at 45.92, but I am asking you to wait to get some other better signal on a daily time frame chart than the one that you're getting right now before going ahead and going deep sea fishing out here, because I just simply don't want you to get sea sick, if you know what I mean. So I'd be patient. Keep watching it. Okay, you were on to something. I know you were taking a look at that weekly hammer candle, so maybe you're on to something, but just get some more information before you go ahead and try to reel in that big old grouper out there. So thanks for writing in. Let's see if we've got any other requests out here. We checked the request line. Of course, that's totally open, 877-927-6648. I don't see anything inside of the Tiger's Den out here. Nothing on the email line. So what do we want to check? Hey, I guess we should go check out Goldilocks, huh? If we take a look at gold here, priced in dollars, priced in euros, priced in yen, what we can see is that the global flow of currency is not headed in to Goldilocks. Not a great scenario. In fact, I believe, well, I've got to take a look at the weekly time frame chart. I believe that wave number 7 just simply has extended. We'll go take a look at that in a moment. But you can see the prior swing points. We can go back further left on the chart, which we will. But we know that the gold price in dollars took out the swing point. Now, the swing point I'm referring to takes us back into the December 2017 level. Now, that swing point had held up until this morning inside of the euro. This thing, that swing point was broken through inside of the yen a long time ago. Just kind of pull this back. You'll be able to see that. Take a look at my cursor. So that's not good. Hey, maybe a 3 drive to a bottom pattern. Maybe not. But in Great British pounds, it's holding up okay. But still, if you're sitting at a trading desk somewhere over in Paris right now, and you're a gold trader, I've got to ask you the question. That is chart number 2. Are you a buyer? Or are you a seller? Or are you neutral? Are you a buyer? No, not a chance. Unless you can find some other type of bottoming pattern similar to what we use out here. And I can't get those. And unfortunately, I can't get this data into my Ninja Trader system without doing a heck of a lot of work. And I don't mind doing a heck of a lot of work. It's just it has to be done daily. And that becomes a real heck of a lot of work. I don't need to do that. I can just look at this chart and say, no way. There's no way you're going to be a buyer. You're a seller over there. If you're taking a look at gold priced in dollars, other than trying to do a little grouper fishing, bottom fishing, are you a buyer? No way. Not buying this metal. No, there's no pattern. We've got wave number 7. I'll show you that, granted. If you are a buyer of gold and yen, are you buying right now? Not a chance. So who's buying, right? When you buy something, you want to see the wind at your back out there. The only group of traders, maybe, that would be considered buying out here. Looking in these currencies, granted, there's 100. This is 4 currencies. There's 176 other currencies out there. But with regard to the gargantuan moves, and it's these that can generate the largest waves out there. Now, that's what you want to be focused on. So inside of gold and pounds, yeah, it's okay. Hasn't taken out its swing point, but you need more than that. Now, when I say wave number 7, potentially wave number 7, here we go. We take a look at it, and you can see that it is extended lower, making a lower low. Take a look at the August contract out here, and so maybe. If we go take a look at a weekly time frame out here for Goldilocks, what are we going to find? Well, in the case of Goldilocks, what we're going to find is the weekly time frame says, hey, Steve-O, I'm headed back here to your little red dash line. Tommy DeMark's set up trend line the last time that we saw a 9 count to the upside, and that gets into about the 1184 level out here. Now, granted, prices coming into a potential area of support, and that's a result of the swing points from, on a weekly basis, March 10th, 2017, July 14th. I almost said July 4th. I didn't. July 14th, 2017 as well. And so, you know, it may find some support here. But that does not mean you go out and you try to buy this metal. Just doesn't make any sense in any currency. Not at least the way that Stevie here is looking at it. And we've looked at the daily and the weekly chart out here. But let's go see how those miners are holding out, because they had a big day on Friday. Nice volume. They got the GDX trading back 31 cents, 16 million shares behind that move out here. And, you know, you had a nice little move higher back on Friday and had about 53 million shares inside of that. You know, so that's a nice way to, in essence, come off of a bottom. Nice big old hammer, by the way, on a daily basis back here in the GDX back on February 9th. But the reality is just kind of dead money right now. You say, Steve, how can you say dead money? Well, I just did. But then what you and I can do is go take a look at the monthly charts for the GDX, and you will see open to close taking you back to April to where we're at now. Basically, no movement whatsoever. That is dead money. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So if we take a look at this chart right here, this is a long-term chart, monthly chart here for the Chinese yuan. We had talked about that before, and a lot of people believe, and maybe rightfully so, that the volatility that we're seeing in the markets today, you know, is really all about the tariff and the potential battle between China and the U.S. And you start talking about these percentage battles and so forth, and the reality is that it's so insignificant. You heard me correctly. So insignificant with regard to the bigger picture that's really going on. Yeah, you can understand a tariff. Hey, you say, okay, you know what? It just cost me a dime, a quarter, a dollar, $100, whatever it might be, because it's a tax that's being passed on to you. But the reality is here, and these guys in China, they're not stupid. And nobody's really talking about the current. If you take a look at this currency chart here right now, the trade imbalance is probably even going to be larger when it's all said and done. If you take a look at this long-term chart out here, you can easily make the case that there's an A to B equals CD. To the upside, this would be the yuan weakening against the U.S. dollar. That means when you take a look at the tax and then you take a look at what your buying power is behind the U.S. dollar, you wait till that Alibaba thing gets going where you can start buying stuff from China overseas, and they figure out a way to be able to pack things in a large container, ship it over, and then distribute it and so forth. It's mind-boggling out here. And if you've never bought stuff directly from China, I have a lot of experience. Used to have a lot of experience. I used to import millions and millions and millions, and I say millions, I mean millions of dollars worth of goods from China. When I owned my retail stores at Walt Disney World, Disneyland, Epcot Center, the casinos, the Universal Studios in Japan, I mean, just all over the board. When I provided all my products to over 20,000 drugstores, that was every Walgreens, every CVS, every Rite Aid, every Myers Thrifty Acres. Of course, they don't drop the Thrifty Acres out there. And the only way that I was able to make a healthy profit was to bring product in from China, glass specifically. Even though you've got great glass manufacturers up, I think it's in like the Ohio area, Shot Glass or something like that, but their prices were so much more So much more. I could air express something heavy like a block of glass in way cheaper than just buying it from somebody here in the U.S. I don't know. Hey, here's the point. The point. Wait, what is the point? Here's an A to B equals CD. If you're going to ask me, hey, long term, where is the yuan headed to? Because it's only made a 0.618 retracement. I'm saying right around 717, 742. With regard to the exchange rate and the U.S. dollar, just saying that the U.S. dollar against the yuan is going to get stronger. Your buying power, right? So they're going to be able to export even more, even with tariffs out there. And these guys are not stupid. And if you take a look at how prices moved off of the C point here, it's an explosive move compared to that A to B move that is out there. So I know that the boob tube, they're just talking the tariff stuff. Hey, there's nothing like just scaring the pants off of you, or what do they say? There's nothing like it's just like a politician. There's nothing better than a good starts with an S. What's the word I'm looking for? Somebody help me. I need a wingman. A wing. What is it? There's nothing like a what is it? It's because the only way politicians can be endeared to you is if somehow they've solved some kind of big problem out there, right? Otherwise, they're just politicians, right? Of course, that's just my take on it. But the reality is here, this is the shell game that is going on in front of you, but nobody really sees it. Nobody's really talking about what's going on with regard to the currency. We've got floating currencies out here. What's going on in China? They're going to tax our ketchup? Are you kidding me? That is what they came up with, is taxing our ketchup? Whew. Now, if that doesn't sound strong to you, my neighbors to the north used to be, because it was the country that was closest to me going south when I lived in Detroit, because Canada had a spot that was just south of Detroit out there. Ketchup? Take a look at what's going on with regard to the Canadian dollar and the U.S. dollar. This is where all the hocus pocus, dominocus is, because people don't really, you only think in terms of dollars out there. I know that. You know that. You're going to the grocery store. You're not saying to yourself, hey, Steve-O probably wants to know, what are these eggs costing me in euros or pounds or yen or yuan out here? You're not saying that. But in the bigger scheme, with regard to where your investments are, whether it's gold or whether it's a stock market and so forth, you certainly have to be, or you'd like to be thinking in terms of those currencies as well out there, because it'll better help you to understand. I promise you, there was a great point made inside the Tiger's Den, which was that if you start, well, let me see if I can find it here. And it says that where is it? I don't know if I can find it. That May. Oh, here we go. That you've got since about May or so. I think May 15th. You've seen selling in the forex market. Turkey, Argentina, now the Chinese yuan. That makes sense when you start heating. Hey, you're going to start heating up tariff talks. I don't know where you're going with this thing, but I'll tell you what, I've got control over the currency, and they have control over the currency. No problem. Keep talking it up, because the end game, when you play a game of chess, I promise you, you will get your fanny handed to you. I like that little fanny pack out there. If you are not thinking 3, 4, and 5 moves ahead, right? You've seen you probably are a chess player out there. You've got to think several moves ahead, and that is exactly what is going on in the bigger side of the picture with regard to the currencies out here. You give us fixed rates, no floating rates out there, then we can start talking about what duties and tariffs are really going to mean to goods and services out there. So yeah, lots of selling in Brazil in stocks, selling we've seen inside of commodities like gold. Not all commodities. Well, we've seen it in soybeans and corn and some other things out here. Selling inside the cryptocurrencies. But that one, that's been going on since December, since the highs in December, and that was kind of easy to see out there. But that money has to flow somewhere. So where is it flowing? Well, we've seen it flow into the U.S. stock market. And what that tells you longer term is the U.S. stock market is long and strong. We're in this consolidation period where it's just simply going sideways, and that is tough out here. But that money is going to go ahead and flow somewhere. Going to flow somewhere. And it will be. We took a look at the Nikkei, looked pretty strong. out there. So the Nikkei, that might be a spot where money, well, we know money has been flowing there. We certainly know it's been flowing into the Russell 2000, let alone we've got a bit of a pullback here. We know the NDX 100. So looks like very good long-term markets for the United States out here. It is good to be king. And right now, with regard to where money is flowing, it's over here. Okay. Let's go see if we've got any questions out here inside. As that probably was enough to make you say, what are you talking about? Let's see. Do we have anything? We've got nothing. I must have just bored everybody to smithereens out there. Okay. I don't see anything else. We come back from this break. I promise I will find something else to talk about. Is that the NASDAQ 100 that is mean and green? Up 6 points? Is it trading above apogee? Is that possible? No, it's trading right at apogee. It's at the most important time where it could be a breakout or a breakdown. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So to close out the day here, what you should be focused on, I'm focused on, is the NQ. Of course, I'm focused on this because subscribers and I are long the NQ out here. And earlier this morning, what we saw was at 4 o'clock this morning, we saw the beginning of a potential Gartley buy pattern, a 0.786 Gartley buy pattern that formed. And as we came into this morning's open, or I should say at 10 o'clock, what we saw was a big, huge key reversal session, bearish engulfing session, confirming both the Gartley buy. I'll go ahead and turn that up. But we can see that when price actually made its most recent high, that was at 11 o'clock in the morning. This was on Friday. And then when it made its, and with Stevie's favorite pattern, your favorite pattern too, you got to admit, it worked in that, it's working in Bitcoin. It's in any event. Let's just come back and take a look at what it did here at 10 o'clock this morning. Same pattern. Now what we're watching for is really a couple different areas. I said the 70, 68 area. I'm really watching this high here. This little green dash line. That green dash line is a time to mark setup trend line. And if price takes that out, that should be real resistance. So we're between the 70, 68 area and 70, 75. So watch 70, 75. If, in fact, price takes that out, what we likely have is not just to move back to the highs from Friday, but we likely have an A to B equals CD pattern setting up to the upside. That A to B equals CD pattern gives you the one-to-one price projection of 71.55 or 7,200. That would be the target based on looking at that. Then we go take a look at the daily equity futures contract. By the way, this thing formed a beautiful, I do mean beautiful, TAS market profile this morning. It is a bullish structured one, and bullish structure says, hey, you can't bust them to the downside. Now I'm going to go test resistance. That's 71.57. 71.57 just so happens to measure up with this A to B equals CD pattern that we looked at. So again, watch the price point. This is the candle session from 11:30. 11:30. Don't do that to me. Let me do this for the folks out there. 11:30. This was this last night. 11:30. 70.75. You close above that, you're up to 71.55. Have a great day, folks. I won't see you till Wednesday. Hey, happy 4th of July. I'll see you back on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.